Well, hello everyone. This is Conrad Zen, former Bitcoin Foundation member and now evangelist for PZEN. So wherever you are watching in the world, whether you're watching me live as a replay viewer or in the new format in Second Life, Slanjivar everyone. And I'm just going to pour myself a steadying glass of fire rum. Fascinating history, fire rum for another day. So, for now, Slanjivar. Well, it's certainly been a very 1984 Orwellian few days, but I'd like to take this opportunity to put this all into perspective. You see, it is extremely sad that thousands of people have possibly lost their entire life savings, having fought hard to comprehend and get into the world of cryptocurrency. But the saddest thing is that many, many more may be put off investing in what is going to be the asset that can save them from the rotten system that we are all living in right now. You see, those of you who live in America live in a corporatocracy. There is no democracy anymore. You are controlled by major industrial conglomerates and interest groups, and they are only concerned in keeping the wealthy wealthy and the poor poor. But there is a way out. And I want to explain to you today what's been happening and why decentralized finance is your savior. Now, the headline today is The Tale of Two Investors. And so I'm going to give you a very, very short and quick story about two investors, two very different investors. And one is a traditional guy who picks his investments very, very carefully based on long-term value. The second investor is a young lady who was born in California, whose strategy is to invest in cutting-edge technology companies that have a propensity for growth. Notice already we have a huge difference here. The first guy is investing for value, for profit. The second lady is actually investing for future growth. Now, herein lies the rub. I can't spend growth. I can spend profit. So the two investors that I'm talking about, of course, are number one, Warren Buffett, and number two, Cathie Wood from ARK Investment. Now, why am I bringing up this story? Well, both of their funds have had very similar performance up until about the middle of this year. And there is a fundamental difference in their philosophy. And it is basically around the idea that Warren Buffett's favorite strategy for investment is time and compound interest, which he has stated is the eighth wonder of the world. Bear that in mind. Cathie Wood, on the other hand, has decided that she wants to put her investors into long-term growth technology companies. And the problem is that that strategy works extremely well in an environment where you have low interest rates and governments printing money into infinity. So it's no surprise to me that Cathie's ETF has fallen by up to 50% this year so far. And Warren Buffett's, even though we are living in very harsh economic times, the Berkshire Hathaway funds are down by a few percent. Money, math does not lie. People lie. And you have to be very, very careful who you choose as your guru in this tumultuous economic times. You have to be very careful of listening to YouTube gurus, these quasi celebrities who purport to know what they're talking about. But when you examine the facts behind the words that they say, they're completely utter garbage. I'll give you an example. I listened to a South African gentleman who was hosting a space about what had happened with FTX, Genesis, and Barry Silbert's Coin Group. And on the same channel, he was shilling a link to a Bitcoin casino and a link to Bybit. Bybit, the trading platform that has wrecked thousands of people. It is just mind-boggling how this is happening in this world. Now, I want to put everything into perspective with regard to what has been happening in the crypto world. And that is, of course, this week, the headlines have all been about bankman, fraudman, Sam No-Bank, the fraudman, SPF as we will call him from now on in, because I can never remember how to pronounce his unpronounceable name. But I want to put this into perspective. And I want to show you what happened in 2008, when we had the last financial debacle. And this is what happened to people who kept their money in what they thought was the safest protocol, which was the banks. Let's just see and remember exactly what happened to people's money back in 2008. The global economic crisis of 2008 cost tens of millions of people their savings, their jobs, and their homes. Iceland is a stable democracy with a high standard of living, until recently extremely low unemployment and government debt. But in 2000 the government deregulated the banks, which would have disastrous consequences. These three tiny banks, which had never traded outside of Iceland before, managed to rack up debts of 120 billion, which is 10 times the economy of Iceland, leaving not only its citizens bankrupt, but the entire country. Trillions of dollars of ordinary people's money is locked up in banks around the world in time deposit accounts. And what if one morning you woke up to find the money you thought was yours in the bank actually belonged to the government? This is exactly what happened to those citizens in Cyprus.
This is a country where tonight you can't cash a cheque. You can't get more than 300 euros out of the bank per day. And let's make this brutally concrete. It's never a good idea to wave cash around on the street, but this is what a grand looks like in euros. This is 1,000 euros, and if tomorrow I go to the airport and leave this country with that and the loose change in my pocket, I'm breaking the law, because that's the limit on the cash you can take out of the country. People with fixed term deposits, they're saving the money for 12, 18 months, will be told they have to keep that money in there.
So that is what is happening in the economy, and we may very well be going to see that again. And so we have to be on our guard. But it is important to understand exactly what the Fed has in mind. And so I do want to remind you of what is happening today, because it is very important to understand. So, for those of you who don't know what the Fed plan is and how it's going to affect you, here is what the media is not focused on. You see, the Fed took a position that inflation would be contained by supply chain issues being resolved. So when inflation figures indicated that it was out of control at 9% plus, and indeed real inflation that we all suffer was closer to 20%, they started to panic. So here is their plan. They aim to stifle demand by causing an economic catastrophe. Their first tool to bring down inflation is to sell the trillions of government bonds they've accumulated over the past few years. Now, the problem with that is that the market for these bonds has three main buyers: the Fed, commercial banks, and foreign governments. And if you want to know what that looks like, see the previous video when we talk about the Ponzi scheme that is the Federal Reserve. Now, the reversal in demand from each of these three different investors types is shocking. Nobody wants to buy these bonds. And so the only way they're going to be able to sell the bonds is by raising the interest rates on the government bonds. They will have to go up to attract the buyers. And that means that interest rates on everything else goes up. The housing market. Mortgage rates go up, less people can afford to buy a home. For the Fed, that equals less demand for homes, which means a home price collapse. Jerome Powell has stated he wants to see a housing market correction. He might get his wish. Businesses will stop taking out loans to expand because it's too expensive to borrow money. Less expansion equals less hiring equals less wage inflation. Less expansion means businesses will purchase less equipment, they'll rent less office space, they will buy less, the supplies that they buy will be less, and therefore demand equals lower inflation. Now, the Federal Reserve thought inflation would be transitory, and they've left it far too late to apply the sledgehammer tools they have. There is no fine-tuning in their toolkit. Now, the next thing is that the stock market could collapse with what the Fed is doing, because without easy money, without the quantitative easing, I mean, let's face it, 92% of all of the printed money over the past few years has gone into the stock market. It didn't go into your pocket, it certainly didn't go into my pocket. And so now, high interest rates plus quantitative tightening will collapse the market. And if it does collapse, an awful lot of people are going to be hurt. The first thing that's going to happen is that retirement accounts are going to be decimated. Nobody is going to be able to afford to retire. People will lose money in the stock market, especially retail investors. And of course, that's devastating enough, but it also means that the tax revenues fall, which puts more pressure on the government budget. Interest rates are going to keep going up. Quantitative tightening will continue because the Fed needs to create a disaster to actually get rid of inflation. And that is what is panicking everybody. It is a disaster scenario in the making. Any one of those three things coming true will be extremely painful. And of course, what may happen is that the Fed will say, well, you either want a Great Depression or we start printing money. And the whole cycle continues yet again. We need an alternative system. We need a great reset tool. You see, wealth isn't scarce. Look at this graphic of the world's wealth. The problem is we need to redistribute that wealth in a more equitable way. And we need a new system of money, which is why we came up with the Web 3.0 socially engineered token called PZEN. It is the Great Wealth Reset Tool. Watch this video to see how it actually works. Okay, so I'm not going to play you that movie just now, but let's put this into perspective. We are looking at a very bad situation in the worldwide economy. But you've just been listening all week about how the cryptocurrency market is collapsing. So let me put this into perspective, particularly with the FTX debacle. You see, in 2008, when Lehman Brothers collapsed, they were in the hole for 1.2 trillion US dollars. The whole of the crypto market today is valued at a mere $800 billion. Apple alone, market cap wise, is worth 3 times as much as the entire crypto market. With FTX collapsing because of the shenanigans of SBF, and I have to say because of the lack of due diligence by the likes of Sequoia, who by the way have apologized this week after I put out my video 2 weeks ago. They've apologized to their investors. But the point is, when FTX, the bankruptcy goes through, they're in the hole for between 8 and 10 billion dollars. And then leading on from that, we have the possible bankruptcy of Genesis, and that leads on to the digital currency group owned by Barry Silbert, and what's going to happen to the Grayscale Bitcoin Trust going forward. And my analogy here is trying to make you understand that although things seem drastic, and although thousands of people have indeed lost their life savings, the mainstream media do not understand the difference between traditional finance, centralized finance, and DeFi, decentralized finance. And so they're making this situation much, much worse and creating a huge drama out of which is nothing more than a shakeout in the centralized finance industry that, quite frankly, needs it. So I'm going to take the next couple of minutes just to explain again the difference between traditional finance, centralized finance, and DeFi, and the opportunity that PZEN offers, and the new economy that is available for everyone here to participate in. So if you just indulge me for a few minutes, I'm going to run these slides. And first of all, I just want to show you, continuing on the theme of the tale of the two investors, this is today's figures, and you can see that overall, PZEN is still up 40%. ARK investments are down 15%, Bitcoin's down 15%, and our old favorite HEX is down around 31%. Obviously, these are figures that are changing all the time. But I do want to, again, emphasize the difference between centralized finance and DeFi. And I'm going to do that by just going through the idea of, what is traditional finance? Well, we all know what it is. We use currencies every single day. Those of you living in the US use USD. We use euros, we use pounds, we use yen. And whatever you want to do with your money, let's say you want to send some money across the world, then you can use a bank. You can use a company called Western Union. And if you want to access your money, you normally put your money in a bank through a current account or a savings account. Or if you want to try and earn a bit of interest on your deposit, then you put it in a time deposit in a bank. Let's say that you want to try and grow your investments. You would, in traditional finance, use your broker or an app like Robinhood, a third-party app. And insurance, well, you go to an insurance company like AIG, and you can use any bank around the world, HSBC, Citibank, etc., etc. We're all familiar with actually handing over control of our money to a third party. We have to trust a third party in all of our financial transactions in traditional finance, which exposes us to a risk of fraud, a risk of mismanagement, and a risk of theft. And you're actually handing over control to a third party. Now, the whole idea of DeFi is completely different. Bitcoin started it all off. The promise and premise of Bitcoin was a peer-to-peer system. It was trustless, it was censorship resistant, and it left you in complete control with self-custody. And this premise has moved forward with the advent of Ethereum and the EVM, which PZEN is built on, which allows you to have complete custody of your money, complete control, and it will give you a higher ROI. Now, the reason for that is because we are looking at cutting out the middleman. This is what this is all about. So, you know, there are huge advantages in decentralized finance. Going back to the example of traditional finance, we have a bank. And if you want to make some money, you put it into a savings account. And the interest rate that they're offering you at the moment is less than 1%. And then the bank takes your money and it loans it out and it makes 4%. So the bank profit is 3%. Now, decentralized finance, its aim is to give you that 3% by taking out the middle man. That is the premise and promise of decentralized finance. That is what we're looking at. And decentralized finance is composed of the blockchain, your assets, your protocols, and your applications. And if you want to go through that in more detail, you should look at the video that I did last week, because I'm not going to go through them again today. But these are the slides that we talked about. But I will just touch upon again the danger in cryptocurrency and in the minds of people what cryptocurrency is, and that is centralized finance. Centralized finance is not decentralized finance. All the news and the bad headlines this week have centered around centralized finance. No pun intended. We talked about traditional finance. We talked about decentralized finance. But in the middle, right now today, we have this stuff called centralized finance, which is still using digital currencies. The difference is we still have a third party. We have a central authority which is in control of that. In the case of FTX, it was SBF. In the case of Binance, it's Yao Xiaopeng. You know, we are trusting people still with digital currencies when we use centralized finance. The whole point of decentralized finance is it's trustless. You are dealing with code. You are not dealing with a third person. And you maintain control of your assets all the time. Through smart contracts, it's permissionless, nobody can stop you. You know, this is the way forward. Even Cathie Wood of ARK Investment fame has come out in an interview and said today that the most exciting area of interest for investment for her is in decentralized finance. And indeed, For most VC firms in Silicon Valley, they are sitting on billions of dollars of cash and they don't know where to put it. Because the ultimate aim is to make yield, is to make profit. And they are going to wake up very soon to realize that decentralized finance protocols are the way forward, not CeFi. And of course, the one that works the best throughout all of this turmoil is, of course, this.
In these tumultuous economic times, it seems harder and harder to get ahead. Even though you have made all the right financial decisions, it's never enough. The problem is not you, it's the system. You see, the system is designed to make the rich richer and the poor poorer. The only solution is to break free from this system. Today, you can join a new, growing economy and finally get ahead. This economy is built around a socially engineered token called PZEN, which is designed to redistribute wealth. The truth is that there is no scarcity of wealth. We just need a better redistribution system. PZEN harnesses the power of the eighth wonder of the world, compounding interest. Simply buy and hold PZEN in your wallet, and after each transaction made across the network, your token balance goes up. This is thanks to the Pay It Forward deduction, which takes 2% of every transaction and distributes it equitably to all PZEN holders. No one is coming to save you. This is the way out, but you need to do the work. You have to get educated. You have to take a leap of faith. You have to join the new economy to secure your financial future. Take control of your finances with PZEN.
So let's put some meat on the bones here then of what this exciting new economy is all about. The very first thing that you need to do is to invest in a hardware wallet before you even go anywhere near trying to buy cryptocurrency. Then you need to get MetaMask installed, and then after you buy Ethereum and USDC, you can go on to a decentralized exchange, and then you can buy PZEN. How do you do that? Well, you can use 1,000,001 different off-ramps and on-ramps, and then use the decentralized exchange that is Uniswap. All of this information is on the website. But there are some things that you have to learn. There are some hurdles to overcome, all of which is explained on the website. So there we have it. We have a terrible scenario unfolding in front of us. But it's not crypto. It's the world economies. If the Federal Reserve decides to raise rates at another 75 basis points in the meeting coming up in December, we are in for a very rapid descent into a very, very deep recession. Even if they raise the interest rates by only 0.5%, they will only be kowtowing to political pressure because they know that that is not enough. And so whatever way you want to look at this, going forward into 2023, it is not a pleasant outlook, but you can opt out. You can join the new economy that is PZEN. It's totally permissionless. Nobody can tell you not to do it. Nobody can take it away from you. It's just code. The code is immutable. It's already battle tested. We've been through all the FUD. We've been through all the shenanigans. And here we are. All right, it's only 3 months, I know, but we're here 3 months later. 100% uptime, 100% true DeFi, 100% trustless yield. That was the promise of decentralized finance in the first place. And the most important thing, you have total control. You have full custody at all times. And so there is no lockup. There is no staking. There's just pure, trustless, compounding rewards. And that is what it is all about, ladies and gentlemen. So I've gone on way too long, I guess, in this really Ministry of Truth esque way through Second Life. For those of you who are watching on Second Life, a very, very big hello. An exciting platform. I was a original member of Second Life when it first came out, and I think it has tremendous opportunities going forward to spread the word of PZEN to an entirely new group of people. So I applaud the team that's come up with this idea, and I highly encourage all of you to sign up for Second Life and head over to the PZEN space for those of you who are not there. Look in the Telegram group, the links are all there. So without, another shock to the system, we are definitely going to see huge amounts of money falling into DeFi because it's the only way out. It truly is the only way out. And eventually we're going to have institutional money pouring into this space. Who knows? We may even be able to do that with PZEN going forward. There are lots of things that we might be able to do in the ecosphere that is PZEN. And of course, particularly when Pulse Chain launches, the long-awaited launch of Pulse Chain is probably just another 2 months away. So there we have it. That's my broadcast for today. I'm going to see if I can take any questions, if there are any, in the chat. And I will scroll back. If you have any questions, now is the time to type them in. Okay, so I'm going to say hello to Crypto Dust, Cheyenne Lund, LGS, hello. And I stubbed my crypto. Crypto Dust says goodbye to the middleman. Absolutely. So I think this is my first live broadcast in Second Life. It's a new beginning. It's a new chapter. It's a new economy. Get excited about this because nobody can stop us. Nobody has any idea of the force behind the new economy that is decentralized finance. We're a very new industry, and you are so lucky to be at the forefront of it. You are the people that hold the Genesis wallets. Do make sure that you subscribe to the channel. Make sure that you follow me on Twitter. And in fact, do that for all the content producers, because the more eyeballs that we have on the protocol, the better it's going to be for everyone. And of course, all you have to do is click a few mouse buttons and we will spread the word exponentially. I'm Conrad Zen, former Bitcoin Foundation member and evangelist for PulseZen, saying Slanjivar, and I will see you in the next broadcast. Thank you all for coming. Thank you all the Second Life watchers. Thank you all the replay viewers as well. Don't forget, as a replay viewer, you can type your questions and comments onto the video. You are not forgotten and you are much appreciated. So, until the next time, I will say Slanjivar, good luck, and I'll talk to you next week.